Let's talk about Curve from this week's article on Brave New Coin. So admittedly, the Curve specifics are a bit light in the article because for me it was difficult to understand the deep stuff, but for the most part, the takeaway I got was that it's an AMM type pooling DEX where instead of the 50-50 split, it has multiple different stablecoins basically you can swap between. So it doesn't focus on pairs that have different values. It tries to focus on trading stablecoins between one another. And when you think about all this stuff collectively, it's like, okay, we have this kind of like revolutionary breakthrough thing with AMM pooling. It's 50-50. There's impermanent loss. We try to fix impermanent loss with the governance token or some sort of token that can make up for the value. And then what's the next step? Okay, different types of pools that have different values. That's where like balancer comes in. And then you have Curve, where it's like, oh, we're just trading between all these different stable coins, stuff with the same value, USDC, USDT, and the list goes on and on and on. So all these things collectively are logical when there's a market need for them and the market is clearly using them. If we look at the volume for Curve in the maroon here, definitely tons and tons of volume for Curve, even though it's mainly just trading between stablecoins, right? You're not going to, probably not, at least going to see Curve spike in total volume relative to Uniswap, SushiSwap, where you're trading between ETH and a bunch of other tokens or ETH and WBTC, that sort of thing. You're probably not going to see Curve's volume ever sort of eclipse any of the other DEXs, but at the same time, it's still a service that's highly valuable with a niche focus. And if we look at the market share, Curve in the again, maroon or brown, whatever you want to think of this as, is still quite a big slice of the total market share. There's Uniswap, SushiSwap, 0x, and Curve. If we look at the Curve token, the release schedule, so they have a 4-year vesting schedule on the token that they airdropped as opposed to these other platforms, Uni and Sushi, where they just kind of airdropped the token. Definitely a different approach. It's easier to accrue value on a token that isn't just dumped onto the market essentially, because you have this effect, this airdrop effect, where somebody gets a windfall, most people are just going to sell it. They're not going to care, they're not going to hold, so that's going to create this massive downward pressure, selling pressure and price until all those people are flushed out. And as price goes down, more people are going to panic and say, I should have sold higher. So it's just a healthier looking chart if it's vested in some way. Now the way the token works is you can stake the Curve token to get a time-locked VE Curve token, which gives you basically a rev share, 50% of the fees. Again, all this is like high time horizon stuff where they're wanting you to focus on longer term. I think the issue that's going to run in with DeFi is if DeFi isn't around in 4 years, like no one's going to care, right, about holding the token for 4 years or vesting these tokens for 4 years. I don't think that's going to happen. I think DeFi is going to be here, it's going to stay here, but that's definitely part of the decision tree timeline, right? Like, okay, what if DeFi explodes and, who cares about vesting tokens that are 4 years from now? Because if it's worthless 4 years from now, what does it matter, right? But overall, if this stuff does survive, then their release schedule is probably one of the better ones. Their token lockup, probably one of the better ones as far as accruing value. Even though it's a governance token with no governance yet, it does have that rev share siren song to hold on to it for that reason. And you'd have to compare all the tokenomics between all these total diluted value, when things are diluted, when things are max inflation, max supply, all that stuff, blah, blah, blah. But just at face value, I personally like the way the Curve model works. If we look at the total value locked, it's number 4 now. It's probably above 4 billion today in notional value. And that's a significant amount of money, right? Anything that's reaching in the billions here, rather quickly, might I add, is significant. And probably because a lot of people are viewing this stablecoin swaps and pools not necessarily as free money, but as low risk. And there's tons of stablecoin money out there. I think a lot of the stablecoin printing over the past few months is a reaction to stuff like Curves and all the swap dexes where the yields are high or the promise for yields are high. The Curve token, the governance rev share aspect, all that is extremely attractive when you compare that to legacy finance, where yields and interest is sub 1%, sub 0.1%. I mean, the yields you get in DeFi right now are insane compared to legacy. If you compare them head to head and you tell a legacy person this is what's happening here, they'd look at you like, what are you talking about, right? That's too good to be true, or that's not reality, but it is. And look at what we're seeing here with Curve since January. I mean, it's gone from 1.5 to 4 billion in total value locked. So somebody clearly likes what they're seeing here. If you look at the token, on-chain token stuff for Curve, here was the token distribution. And ever since then, the on-chain token stuff has been rather mediocre. But if you think about, okay, this stuff has to be locked for a certain amount of time, staking-wise, to even get any value back out of it. To me, you're seeing that on the chart as far as the token on-chain stuff. Like, you're not going to be moving this around a lot in reality, most likely. This is just going to get staked and then sit in a wallet. So I wouldn't expect transaction counts to explode. Transaction sizes are exploding. Part of that is a function of token price. Part of that is a function of ETH fees being extremely high, so fewer people are moving smaller transactions. If you look at NVT, inverse metric of economic utility, and active addresses are declining flat, but again, you're not going to see active addresses spiking if there's this staking element that promotes long-term holding, basically. NVT has continued to decline, really because average transaction sizes are up. So this does suggest that market cap is underpriced relative to on-chain activity. Moving to technicals here, 5200 EMA on the 4-hour, monthly pivots, VPVR, volume, and RSI. So Curve had a consolidation period from November to middle January, like most of DeFi, and then ever since then it's been just straight up along with everything else. So I said this in the last video, I'll say this again. I don't know, individually between all these tokens, is any one of them better than the other, or is the market signaling that as a sector this stuff may have value near term, short term, long term, and that's why the speculation on it has just exploded. 15 to 200 are both above $2 at this point, so downside should be rather limited. There's a yearly pivot at 2, monthly pivot at 2, and there's monthly pivot resistances which are pretty tight all the way up to 9. So I'd look to any of those levels if I was long and looking to get rid of some or sell or anything like that. Tons of support, sub $1 based on this volume, time spent in that range. There's kind of this continuous bearish divergence here as price goes higher and higher on less and less volume, but that doesn't seem to matter across the board for any of these DeFi tokens at the moment. 4-hour cloud has been pretty on the money as far as telling you when to get in and out of trades. There was a bit of a messy long from early January to January 11th, and then it told you to relong January 14th, and it's told you to hold the entire time, barring maybe late January, how you interpret that, but this looks like a clean, healthy trend. When you start to see lagging span move into price, that's when things start to go sideways. I think this actually broke up today, so it's probably at a higher price today than this chart is showing. But overall, trend looks great on the cloud. Higher highs look very probable. If you look at the Curve BTC chart, this time on the 6-hour, it's above the 200 period MA. It's above the cloud, although it's a bit dicey trend-wise because it's starting to TK cross bearish. It's starting to move into the cloud. So for me, I'd wait for bullish TK recross above the cloud. Wait for everything to flip bullish again, essentially. But I like 10,000 sats. I like 13,000 sats. I like these monthly pivots. Tons of volume support on the way down. So that's kind of your buffer here. If you're long and even if things don't flip bullish for you, the downside is rather limited based on support. And there's support at 6K. There's support at 5K. There's tons of support below 5K. And you did have this continuous bearish divergence on volume and RSI all the way up. And for some reason on this chart, you see this a lot. Just successive declining volumes. But overall, this still leans more bullish than bearish. So out of all the DEX pool DeFi stuff, Curve is probably one of the lower risk as far as a swap is concerned. All these have smart contract risks, certainly. It's filled a niche, and that niche is clearly being used by the market, so you can't really knock it for that. It's got a long-term lockup, high time horizons type stuff, focusing on longer-term holds versus short-term. The technicals for the USD chart look bullish like everything else in DeFi, and the technicals for the BTC chart also look relatively bullish, even in comparison to some of these other DeFi BTC pairs.